Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Monday, February the 22nd, 2010. Well, another small body candle today and a small red body, and that tells us that the bears have made a small amount of net bearish progress on the day between the open and the close, and significantly it means the end of the bulls making net progress on the day, and that could be fairly significant for this first time frame uptrend that the market's in. Previously we had a series of 5 green body candles in a row, and certainly the majority all throughout the past few weeks have been green body candles as this market has been trading to the upside in this first time frame uptrend. This is a spinning top type candle which denotes indecision in the market, and that's because of the small amount of net gain made by either side, especially here. As we can see, the bears were slightly on top, but really not too significant. And there was downside price rejection, as evidenced by the shadow on the top, and upside price rejection evidenced by the shadow on the bottom. Interestingly, that upside price rejection came in at around that 1106 region, which we previously identified as an area of resistance, and now a small minor level of support. So if the market does come off, it needs to trade down through that area, obviously, and certainly will, because we have the low extended just below there. So the low will need to be taken out with a lower high and a lower low for a change of trend. Now this is a potential Japanese candlestick reversal pattern as well. It's a tweezers top pattern, and we have a substantial trend for the market to retrace here, so it could turn out to be a good probability or high probability that the market will reverse here to the downside. With tweezers top patterns, we do need confirmation, and confirmation will be a lower high and a lower low. So the low again of this candle becomes important for the market to potentially retrace part of this first time frame upswing. Now the market is trading within the cloud, so we have a neutral market, and we've had over the last few days, and certainly over 3 of the last 4 days, very small bodied candles, and that tells us that neither side has been making any significant bullish nor bearish progress on the day. So that means that there is a strong potential for this first time frame uptrend to terminate. The market is trading up above the Kijun-sen and the Tenkan-sen, which means that the market is bullish. But overriding that, don't forget, is the fact that we're trading within the cloud, so that tends to lessen the emphasis that we place on the market trading up above those 2 indicators. Unfortunately, the Kijun-sen is trading up above the Tenkan-sen, which is a bearish indication, so that adds some confusion into the scenario that we're building here. It's not all neutral or bullish. There's a bearish factor there still as well. Looking at the Tenkan-sen, that represents the trend in the fast time frame. It has been pointing up very sharply, and that's reflecting the very strong upside momentum that the market has. And quite often when that happens, when it points up sharply and the market has strong momentum in that fast time frame, it tends to retrace back towards that area and find support around there. So that is trading down around 1085, so there is strong potential for the market to find support there. Having said that, though, there is strong potential for the market to find support anywhere through to the bottom of the cloud. The bottom of the cloud is down around 1089, so there is potential for support all the way through here. Also at the Kijun-sen, which is at 1097, strong potential for support. If the market does continue trading up, and not every Japanese candlestick reversal pattern works, they do fail. We need to bear that in mind. The tweezers top tends to be one of the more successful patterns that actually work, but we do require confirmation of that pattern. But we do need to watch the high of these 2 candles for the potential for the market to continue appreciating. So if the market does continue to the upside, there's potential resistance all the way up to 1126 roughly, and then certainly above there to 1133. So we have a market trading within the cloud, potential for resistance to the upside anywhere up to a certain level, and certainly to the downside.
you.